Robert Kiyosaki, a luminary in the domain of personal finance, rose to prominence with his groundbreaking work, Rich Dad, Poor Dad, published in 1997. This seminal book, which spent over 6 years on the New York Times bestseller list, transformed the way countless individuals perceive wealth creation and financial independence. Kiyosaki's core philosophy, articulated through the contrasting financial teachings of his biological father, Poor Dad, and the father of his childhood friend, Rich Dad, emphasizes the importance of owning income-generating assets over relying solely on earned income. While the fundamental tenets of Kiyosaki's approach to personal finance have resonated with millions, his prognostications regarding stock market crashes have drawn both attention and skepticism due to their inconsistency and lack of alignment with market realities. Before achieving acclaim as an author and financial educator, Kiyosaki's journey was fraught with financial challenges and setbacks. Despite obtaining a Bachelor of Science degree from the U.S. Merchant Marine Academy, his academic pursuits at the University of Hawaii at Hilo's MBA program were curtailed. Moreover, his entrepreneurial endeavors were marked by failures, including several business ventures that ended in bankruptcy, culminating in a period where he purportedly lived out of his car during periods of financial distress. Alongside his controversial financial advice, which has drawn criticism for advocating practices such as insider trading and leveraging unfunded brokerage accounts for stock investments, Kiyosaki's predictions about impending stock market crashes have become a focal point of scrutiny and debate. Over the years, Kiyosaki has made a series of predictions about looming stock market downturns and economic crises. However, the accuracy of these prognostications has often been called into question, as they have frequently failed to materialize as anticipated. For instance, in April 2011, Kiyosaki suggested that the economy was teetering on the brink of another crash, following the fallout of the 2008 financial crisis. Yet, subsequent market performance did not corroborate his prediction, with the S&P 500 index exhibiting resilience and delivering positive returns. Similarly, his forecast of a stock market crash in 2016 did not come to fruition, as the market experienced only modest volatility before rebounding. In 2018, Kiyosaki reiterated his warnings, asserting that the impending crash would eclipse previous downturns, prompting him to advocate for investments in gold. However, while gold prices experienced some upward movement, they were overshadowed by the robust performance of the stock market during the same period. Even amidst the COVID-19 pandemic, Kiyosaki's predictions of an extended market downturn were swiftly disproven, as the market rebounded vigorously following initial declines. Furthermore, his characterization of the American economy as being in a depression in 2021 diverges from conventional economic definitions, highlighting a disparity between his assessments and prevailing economic indicators. Despite his persistent warnings, Kiyosaki's track record in predicting market crashes has been inconsistent at best. As such, investors are advised to approach his prognostications with caution and skepticism, refraining from making significant financial decisions solely based on his recommendations. Instead, adopting a diversified investment approach, grounded in sound financial principles and a long-term perspective, may offer a more prudent path toward financial stability and growth.